But as we promised you, more exclusive conversations from Monaco, and now Shereen has with her Mr. Uday Kotak. Shereen, over to you.
Modulate.
I think we still have a couple of minutes left before we can get that line through, because this is a live line from Monaco that we are trying to get for you. So let's listen into the conversation.
We're coming to you from Monte Carlo from the EY World Entrepreneur of the Year Awards. And I'm here with the EY World Entrepreneur representing India, Uday Kotak. Mr. Kotak, appreciate you joining us. Same time last year, when the government had just been sworn into office, you said, Acche din aa gaye. Then we had a conversation a couple of months later and you said, Acche din aa rahe hain. A few months later at the World Economic Forum, when we spoke, you said, Acche din dheere dheere aayenge. Where we stand today, what's the deal?
I think you've got to really define Acche din in a particular manner.
Okay.
First, if you look at the macroeconomics, current account, inflation, fiscal deficit, Acche din are there because you're significantly better than what you were last year.
Right.
Yes, oil has helped, but all these three factors are very much under control compared to what they were last year. So from the point of view of macroeconomic stability, we've made a lot of progress.
Okay.
However, when you look at the combination of, at some level, India has been a good boy in a bad world. Therefore, if you look at easy monetary policy by the US, by Japan, by Europe, and now China.
Yeah.
India has maintained a good discipline both on monetary policy and fiscal policy. So when you're doing that, you then say that we are ready to ensure sustainable macroeconomic conditions, even if it means growth comes with a little bit of a lag and comes slower in terms of the trajectory.
Okay.
If I'm still of the view that India is on a positive growth path, but dheere dheere.
Okay, what does dheere dheere now mean? Do you believe that maybe at the end of the calendar year, we are actually going to see a turnaround? That means in H2, we are going to see a real turnaround, whether it's corporate earnings, whether it is demand, whether it is consumption?
I think, Shereen, another important point which is keeping India under a little bit of pressure is excessive leverage of large parts of India.
Corporate India, yeah.
So that leverage needs to be recognized either as a problem
But isn't it recognized as a problem already?
Not fully. I don't think there's a full recognition of what needs to be done with the excess leverage. So we need to correct balance sheets of corporate India and their impacts on banks and really get our act together on fundamental structure of Indian balance sheets. And that, I think, is an important point where I think there is a clear role for debottlenecking. I think some of it has happened, but a lot more can happen. But there is some level where recognizing reality is as important.
Recognizing reality by the promoters or recognizing reality by banks?
Both. Because promoters have to be clear that either they bring in new capital or they run the risk of losing their companies. And banks, to be clear, what is the fair value of their debt?
So you don't then see any significant turnaround as far as corporate earnings are concerned?
My sense,
at least over the next 6 to 8 months.
My sense is corporate earnings turnaround. I am more of the view we will see it towards end of FY16, which is probably closer in the fourth quarter is when I see it. And of course, we have to watch it and we've got to work for it. Unlike the past, where a lot of Indian business were able to show corporate earnings by quick arbitrage. This is a time for hard work, getting the balance sheets right, and building a sustainable business. It's not a quick fix. It is not about steroids.
It's not about steroids, you're absolutely right. But speaking of steroids, let's talk about the equity markets. And it looks like the Chinese market is on steroids at this point in time. And it seems to be coming at the cost of the Indian equity markets. Today, we're down about 4% for the week as far as our markets are concerned, on the Nifty specifically. Do you see the significant volatility that we've now seen over the last few weeks continuing? Do you see the markets correcting even sharply from this point?
See, China looks like a bubble. I'm not close enough, but the sense I get is when you open a few million retail brokerage accounts a week, it feels and looks like a bubble. And a bubble may have short-term joy, but creates sustainable pain, as we have seen even in the case of Japan, or the cause of the global financial crisis in the US. Therefore, I would much rather India
India is a good boy in a bad world. Uday Kotak's message to corporate India and banks is both need to get realistic. Promoters need to either bring capital in or lose their assets, and banks need to be clear about the fair value of their debt. China seems to be headed towards a bubble. We'll get you more of the conversation with Uday Kotak on India Business Hour. For now, we have to say goodbye.